Good morning, good day, good afternoon, depending on where you're at in the world. This is Wolverine broadcasting out of Ann Arbor, Michigan, U.S. of A. for the Salvation Trading Company, where we teach our clients to trade Forex with realistic outcomes using proven price indicators and cross-pair analysis. This is from the screenshot I'm going to show you is from one of last week's follow-up screenshots on a trade that we took. You can see from last week we only took 8 trades, but we had 8 of those that were successful for 155 pips and never got stopped out on any of them. So again, it's not about the amount of trades, it's about trading successfully. That's important, and sometimes we just need to wait for the right setup for that to occur. So I'm going to go to our the highlight trade I wanted to show that we took. Now this is a live trade call. Okay, so we took this live on the back on the 27th, towards the end of the week, and this was taken in the U.S. session. All right, so you can see here this was a successful trade for 22 pips. All right, so now this is a counter trend trade, and I'll explain why. Now remember, we use primarily 3 indicators here when we trade, and that we find these to be successful. First of all, we have these resistance support levels again. 57.15. We have resistance up here at 57.15. Okay, this is a predetermined level right here. This is, and then we also have a predetermined support at 57.86. Okay, so we have support here at 57.86. Again, these are predetermined. These levels are sent to my clients 24 hours in advance. So these are levels that are predetermined where there's a high probability that there's going to be resistance or support at these levels. Now, that's the one indicator. The other indicators that we use are the MACD indicators. MACD, moving average, convergence, and divergence are all about momentum, right? About momentum, and this is how we scalp within the channel. Now we do have a couple other trading methods to trade. We have a daily trading suggestion and also a weekly trade suggestion, which is more of a position trade. But for this purpose, on this for this screenshot, this is a scalp using a 1-minute MACD. All right, where we're trading and learning how to trade within a channel. All right, and you can see the market's been holding price within this channel. All right, on these predetermined levels. Okay, these levels weren't just put in here; these are already predetermined, well in advance where the channel's likely to be held. And so we're just trying to figure out how we can trade within this channel, and that's why we watch the MACD lines. It tells us momentum, and then we watch our trend lines. Our trend line gives us the general trend. Now, this 5-minute trend line was just moving slightly up. All right. Now, these trend lines are available from your broker. So is the MACD lines available from your broker for free. So every broker provides these indicators at no charge. And again, my service provides we have no data feed that you have to buy into. It's all about using indicators that are readily available with the resistance supports that I provide that give you the entry and exit points of your trades, whether you're scalping, daily trade, or position trading. So in this particular trade, and here's the live trade call, we are waiting for on this cable. On cable, we're waiting for price to come up and test resistance here, and it's all about confluence of indicators. So we know we've been moving within the channel. Price has been moving right back down, testing support, then coming right back up, and we're waiting for resistance to get tested, as well as indication that we're getting price to become overbought or overextended on the MACD lines. So in this case, we see the MACD lines do get up here to an 006 area. And anything past 0.5 is typically overbought. So now we're waiting for the right type of indication to get into this trade. Now, we didn't get into it earlier at a higher level because the U.S. equity markets were opening up. All right, so I waited for the U.S. equity markets to open up. Then we had a quick retest a resistance just above resistance here. You can see it starts turning right back down as our MACD lines. So we have our fast moving average, which is the red line, our slow moving average, which is the green line, and we have our three elements of we call trigger elements. We have conversion, all right, it's part of the MACD process. There's the convergence, and we have a crossover. That's the fast moving average crossing over the slow moving average, and we have divergence. We have the fast moving average separating or diverging from the slow moving average, and there's the histogram confirming that we're getting divergence to the downside, to the short side, right? So, and at the same time, this all happens while we're coming down trying to break through this support resistance, and we're coming down establishing our 5715 as resistance. And as that starts to move down and we get momentum, we're getting more sellers into the market here, this is catching the momentum to the downside, to the short side. So we got in at 5708 with our stop loss at 5720. Okay, that's our 10 pips and our spread. And we took, and as momentum starts to move the price short, there's our divergence still developing in here between the fast moving average and slow moving average. We have price also moving right down from our entry to our first target. First target is usually 10 pips and a spread. All right, that's where I recommend we take 70% of our trade off at that point. And so I use, if you're running 3 lots, you take 2 lots off here, depending on how you want to manage the trade. But I take a major position off right at my first target at 10 pips on my spread. And then I move my stop to break even or plus 1. In this case, we move the stop to plus 1 here, right back up here at plus 1. And just in case price was to move back up, we would still be protecting our capital and still have winning pips, positive pips. So in this case, though, we still had divergence moving down. Remember, this started up here around 0.0067, so 07. So it's not surprising that where did the MACD line start to level off at? Well, right about the same place where it started on the opposite side. So around 007, 008 here. MACD lines start to level off. But in the meantime, because I still had a small position on, and I waited for price to come right down to where? Right to predetermined support, or I took additional 10 pips off here and at support, and we did break below support, but I was happy to get my 20 pips total for a total of 22 pips on the trade. Okay, so it's a and here's the time frame. Right at the top of the hour at 10 o'clock, we took the trade. In 11 minutes, we were done with this trade, and already I got 22 pips out of the trade. So, and again, you can see it's all about the confluence of indicators. This yellow vertical line will show you the timeline where we got into the trade, entered the trade, and you can see how we go through a checklist here and to make sure that we are meeting our rules of engagement. We call this our rules of engagement. So here we're trading. The only thing that we couldn't check off is that we were not trading with the 5-minute trend line. So that we knew, but that we just know it's a counter trend trade. Slightly, as the 5-minute was just slightly moving up. The 1-minute though is also moving up. So we would have to consider that a counter trend. But other than that, price was testing known resistance. MACD lines are converged right around the 0 line here. The fast-moving average was crossing over the slow-moving average. We confirmed that. We had no high-impact news coming out, and cross pairs were fueling this trade, which means we had the dollar Swiss moving long at the same time, and the sterling yen shorting, which helped encourage the cable to short. Okay, so that's that trade highlight. Now again, at any time, feel free to go to our website at www.salvationtrading.com, where you can join us there for a 10-day free trial and join us for live webinars the first 2 hours of every market session every day, where I provide training, setups, and take the live trades like you just saw in this past screenshot. You can also, going to the website, you can then review all the previous week's screenshots, the monthly and yearly results, where we post both the positive and negative trades for the scalping, the daily channel break, and the weekly channel break trades. So feel free to come to the website and join us, and love to have you in and work with us and see if you enjoy the strategy. All right, again, this is Wolverine with Salvation Trading Company, and God bless, and hope to see you in our webinar soon. Thank you.